We've seen the impact of AI on technology-driven companies. Actually, an interesting observation with this year's Russell Reconstitution as a rank day was that while the total U.S. equity market capitalization of the broad Russell 3000 index was up 20%, the combined Magnificent Seven companies, many of them are impacted by AI, and they increased their market capitalization 44%. So almost double the rest of the market in terms of percentage growth. And all seven companies remain 100% growth. We can't say, how this will continue to impact, but certainly because of the AI impact and significance, we've seen the growth of the largest companies in the index.
What is the importance of the Russell Reconstitution?
Russell indexes were launched 40 years ago in 1984 by Russell Consulting and manager research to solve a client problem, initially driven by clients wanting a better benchmark than what was available at the time. Russell identified the most commonly held 3,000 stocks within their clients' portfolios, which became the basis of the broad Russell 3000 index segmented into the large cap Russell 1000 and small cap Russell 2000 indexes, the first of their kind, a comprehensive modular set of benchmarks and the first free float adjusted benchmarks that represents the true investable opportunity set. Russell indexes were designed with rules-based, transparent index construction, built simply so that any person can follow the index construction methodology. And Russell Recon is the annual rebalance of the Russell indexes and a critical part of maintaining the representativeness of the Russell indexes. The membership of indexes such as the large cap Russell 1000 and small cap Russell 2000 is reset, as well as the growth and value style index membership to ensure changes in the markets over the previous year are reflected.
What was the response when Russell indexes were launched?
That Russell Consulting, they were consulting for large pension plans who were at the time using a lot of active managers. And they were finding it difficult to benchmark these managers against the portfolios, the portfolios against the benchmarks that existed at the time. The S&P 500 was too narrow. It was not representativeness. Clients held a lot more stocks beyond what was in the S&P 500. And at the time, Wilshire 5000 also existed, but there were too many stocks in there that were illiquid. So that's how Russell Consulting came up with the idea of the investable Russell 3000 index that included a broad cross-section of securities across the U.S. equity markets. And then in looking at, what's an appropriate benchmark for the large cap space, for the large cap active managers, they determined that the Russell 1000, the 1,000 stocks at the top, the largest 1,000 stocks in the Russell 3000 index, became the appropriate benchmark for these U.S. large cap managers. And then the bottom 2,000 stocks became the small cap Russell 2000 index to benchmark active managers who call themselves small cap managers.
How much trading occurs after the rebalancing?
Based on third-party sources, as of the end of December 2023, FTSE Russell estimates that approximately $10.5 trillion was benchmarked to a Russell index, including active and passive index funds, benchmarked to a large cap Russell 1000 or small cap Russell 2000 and the growth and value segments. Russell Recon is widely followed, and it tends to be generally one of the most anticipated and busiest trading days of the year. Last year, at the close of Russell Recon, $134 billion traded at the close across NYSE and NASDAQ exchanges. The annual Russell Recon is a critical part of maintaining the accuracy of the Russell indexes to continue to represent and reflect the large cap, small cap, growth and value segments, and updating the index membership annually, reflecting changes over the past year, is a critical part of maintaining the representativeness.
What lies ahead for the equity markets based on the Reconstitution?
I think it's important to recognize what the Russell complex is, especially Russell 2000 as a key indicator of the US domestic economy. I think it's if you look at the Russell 2000 names, they're much more domestic focused than the Russell 1000, which are more multinational in nature, and also Russell 1000 names have much better access to financing and balance sheet. And so if you think about the environment we've been in, kind of high rate environment, Russell 2000 names are much more exposed to the current pressures in terms of financing and access to capital. So I think all of that is reflected in some of the participation we've seen over the past year. And as we go into the Russell Reconstitution, some of that will be reflected in the Reconstitution as companies move between Russell 1000 and Russell 2000, and also in the sector weight and compositions that are in those indices. So I think coming into the Russell Reconstitution, you can see what the historic pattern's been for the last year, and we'll see what it is going forward.
What are the Russell products?
We have E-mini Russell 2000 futures. They trade around the clock, very liquid. So in notional terms, we're trading around $22.5 billion a day notionally on that contract. So sizable liquidity, which our clients really value. And it's a really easy way to gain access to the Russell 2000. If you think about the Russell Recon itself, that's an event where potentially if you're trading across Russell 1000 and 2000, you're trading over 3,000 names. That's a really high operational burden. And so being able to use a future such as the E-mini Russell 2000 can be very useful if you're looking to basically outsource some of that high operational burden of trading all the underlying names and using index-based products such as the future. We also have complementary products in terms of micro E-mini futures as well on the Russell 2000. So that's a smaller size contract, 1/10 of the notional, allows retail participants to trade the product as well as institutional clients to fine-tune their positions. We also have options on futures. They trade actively on the Russell 2000. And so all of these products are helpful. And in addition, we have functionalities such as BTIC and EFP, which can help clients to access those futures and move between their current positions and position themselves potentially for the rebalance. BTIC stands for Basis Trader Index Close. And what this is it's a functionality which allows you to trade against the cash index close. So if you think about the official index that Catherine's describing, when it comes to trading a future, you want to trade a future which is based on that index. You can do that by agreeing to a basis intraday. So for example, if you agree to a basis on the Russell 2000, let's just say, for example, it was trading at a +1 basis, and that's what you agreed to trade against another counterparty, then what would happen is wherever the Russell 2000 closed tonight, that pre-agreed basis would get added onto that official index close, and that's where you'd buy or sell a future. So let's say the official index close tonight was 2108.5. That basis of +1 would get added on, and you'd buy or sell a future at 2109.5. And so it's a very popular functionality. A lot of our clients like using this, and it's an easy way to transition any portfolio that you've currently got into Russell 2000 or vice versa. And the way you can do that is because it's struck on the close, you can divest any, say, cash portfolio that you've got on the close in the auction and use BTIC instead to get the exposure via futures and essentially move to an index-based product.
How is working with other exchanges on a product like this?
Working with the CME is a wonderful experience for us. We have complemented each other in terms of products. If you look at the Russell ecosystem, it does incorporate derivatives, and these derivatives could be futures, options. Both the CME and Cboe trade derivatives on the underlying index, but you also have options on the ETFs. ETFs are also tracking the Russell indexes. So we look at the ecosystem as a growing entity. Participants in this ecosystem might be trading all of these products or a subset. It's an opportunity for market participants to express a view, whether it's futures or options. But what makes options a little bit different because we have calls and puts that can help a market participant construct the risk-reward payout, as opposed to just having you're either long, you're short, or you're on the sidelines. So with options, you have the ability to, look at how much risk are you willing to take for market view, up or down, but you also have the ability to harvest volatility.
How does the RVX serve as a barometer?
Let's take a look at what is RVX. Cboe created a Russell 2000 volatility index. The ticker is RVX. Cboe calculates this index intraday as well as an end-of-day value. What it represents is an expected 30-day volatility on the Russell 2000. So the methodology to calculate this index is similar to the methodology that has been used to calculate VIX, also known as a fear gauge. Why is that? As volatility increases, it typically has an inverse relationship to the underlying index. So if volatility goes up, there's an anticipation that the Russell 2000 index is going to go down. Looking at RVX during the Russell Recon period, we're monitoring levels of volatility and the potential impact of volatility as a result of the rebalancing or recalibration of these indexes. Keep in mind, during this Russell Recon period, which is about 6 weeks, we're seeing constituents within the Russell 2000 and the Russell 1000 added or deleted. And FTSE Russell does a magnificent job managing the process and disseminating information to minimize that potential market impact. So when you think about $10 trillion worth of portfolios being managed to track the Russell indexes in general, the Russell 2000 is a subset of that. I'm going to guess it's roughly 3 trillion. And when you have $130 billion worth of stocks trading at the close on Recon Day, the potential for volatility is there. And so we look at the levels of RVX normally, and the average RVX index is about 24. And during the Russell Recon period, at least for the last 5 years, it's been averaging less than 24. In fact, right now it's around 20. So the expectation of volatility during the Recon period has really been dampened. And I attribute that to the marvelous job that FTSE Russell does in managing the process and disseminating information on the additions and deletions.
What is the schedule of this year's Reconstitution?
Russell Recon Day is one of the most anticipated and orderly index rebalance events. Eligible companies were ranked on April 30th to form the newly reconstituted Russell indexes. We announced our preliminary recon changes on May 24th, and we're still during the query period where we're receiving feedback from the markets and clients in terms of the changes that were announced, which closes on June 7th, after which we lock down. We entered the lockdown period, and changes are basically locked down for recon changes. And, corporate action changes will still continue to take place, but then we'll charge forward to the June 28th Russell Recon close, where recon changes are final, take effect after the close of U.S. equity markets. And then for performance purposes, the new memberships take effect from the open of U.S. equity markets on Monday, July 1st. Our transparent and thoughtful reconstitution process includes primary exchange closing prices from NYSE and NASDAQ to complete the Russell Reconstitution trade, and NYSE's auction mechanism, NASDAQ closing cross mechanisms. They help execute the shares for each stock at a single price on Friday, June 28th, which supports the transparency and seamless nature of this Russell Recon event.
How can investors take advantage of the small cap market?
We can't give investment advice per se, but if we just think about, portfolio diversification, size is one of those factors which can help diversify a portfolio. So for clients who have already got a lot of exposure to large cap names, it can make sense to diversify and have more small cap exposure in a portfolio, and that can potentially enhance it. Also, if you think about trading strategies, a lot of clients actually trade or implement large cap versus small cap trading strategies. So do relative value trades between size as a factor. So again, from that perspective, that could be an alpha generating trade, and it can allow clients to take positions and try and time the market in terms of when small cap might outperform or underperform. We've seen large cap outperform for a long time, but historically, I think small cap stocks have actually outperformed large cap over the long term, and also tend to outperform after recessions have ended in the 12 months or so that after a recession's been. And so we're going through this period where everyone's speculating about where is the US recession, where has it been, and will we have a soft landing? But even if that recession doesn't materialize, perhaps it's a similar scenario to historic patterns whereby small caps will look to outperform. So we'll see what happens going forward, but I think there's lots of opportunity to include small caps in any kind of portfolio.
Why has the Russell 2000 been underperforming?
The Russell 2000 has been underperforming, and one of the reasons for that is if you look at the industry weightings, the industry sector weightings, they're considerably different between the Russell 1000 large cap and the Russell 2000 small cap. The healthcare and financial industry sectors are really the top two sectors within the Russell 2000, as opposed to the information technology on the Russell 1000. But I think you're correct in your assessment that there's an opportunity. If one takes the position that interest rates might be heading lower, the constituents within the Russell 2000 are small cap companies, and by definition, they're financially leveraged. So changes in interest rates, particularly lower interest rates, could have a material impact on the profitability of these firms that are running on tight margins. So you can think of an accelerant. If interest rates go lower, you might see outperformance in the Russell 2000 relative to the Russell 1000. Another way to look at it, there is a potential trade looking at the difference in volatility on the large cap versus the small cap. So if you look at RVX versus VIX, for example, there's typically a 600 basis points difference. And one could do a trade in theory where you could, sell a straddle on VIX options and buy a straddle on RVX or Russell options. So there's opportunities out there. You just have to be a little more diligent in putting on those types of positions.
What are some of the notable changes you expect to see?
Some notable changes that we'll see at the close of Russell Reconstitution include the graduation of some tech companies from the Russell 2000 into the Russell 1000. For example, Super Microcomputer and MicroStrategy are a couple examples. And so we see this shift in technology weight and increase in the Russell 1000 further. Further stressing Paul and Rick's points about diversification potential. The Russell 2000, it's a more diversified index versus Russell 1000 is more concentrated. So tech, consumer discretionary, and energy leading companies moving up into the Russell 1000 index. Now, healthcare companies are replenishing the Russell 2000 index, and we see 3 IPOs joining the Russell 1000 index. 11 IPOs are being added to the Russell 2000 index, with 7 of those companies from healthcare. So those are some of the themes we'll be seeing at the close of Russell Recon this year.
Any last comments?
Russell Recon, I think, just one of those days in the trading calendar, which is very exciting just because so much is happening and, so many companies are being traded around. But I think what's interesting is that there are all these tools out there, both in terms of futures, options, other products in the marketplace, which can help clients to manage their risk going into that reconstitution. And so just as, I can't stress enough, one easy way to manage the reconstitution is really to outsource the problem. And that's to really buy an index-based product, such as a future or an option, and that can help you basically manage that reconstitution, avoid any tracking error from failing to basically trade all the component parts correctly at the right time and in the right size.
Whether you're an institutional market participant or a retail market participant, we have a large contract, which is the Russell 2000 index, tickers RUT. We also have a mini Russell 2000 index, ticker MRUT, which is 1/10 the size of the large contract. So whether you want to trade a contract that has a $200,000 notional value or $20,000 notional value, you have those products available to you. I also want to point out the liquidity is pretty robust. Average daily volume in our Russell 2000 option is roughly 70,000 contracts per day, which is about 14 billion notional. That's important to note because when you are trading on a day-to-day basis, you want to have liquidity there. And we recently added earlier this year Tuesday and Thursday expiries. So again, if you're a short-term trader and you want to express a view on a daily basis or on a weekly basis, whether you're institutional or retail, you have the ability to use these products any way you would like to. And again, looking at volatility during a 6-week time period, you can trade on volatility. And there's a variety of, again, we're not recommending any particular trade, but there are various trading strategies commonly used by investors, traders to harvest volatility. And whether you want to do it in a large contract, short contract, small contract, daily basis, it's all available with our products at Cboe.
Cboe and CME, their products, while I can't give investment advice, they do help democratize access to index investing because indexes themselves aren't investable. And the futures and options that Cboe and CME provide help give access to the traders. And, I really like Rick's point about, having smaller contracts and more frequent, contracts that I think has been popular, I'm guessing, with your clients.